Hello friends, welcome back to my channel. The bear has truly arrived and it is howling out loud. All the global stock markets are falling and the same domino effect can also be felt in the Indian stock market. The Sensex and the Nifty50 indicator has plunged in last few months. Let us go deeper into this issue. As we can see, on 12th of May, the Nifty50 indicator has crashed by around 2.2%. It has, really been a very hectic and bad day, as it was a seller's market, a bear market. As you can see that the Nifty 50 has corrected from 17,600 levels to current 15,800 levels. It has been a correction of around 10% on this year. The Dow Jones Industrial Average indicator has also corrected by around 13%. Almost more than 13% rather to be said in this current year till date. Followed by, we can see that the Hang Seng index, it has also corrected by around almost by 17% in this current year till date. So we can see that all the global markets, all the major markets are falling. Let us see that where are we standing compared to last year's levels in Nifty 50. We are still in the green. Surprisingly, we are still around 8% above the last year's levels. Whereas the Dow Jones Industrials have truly crashed from last 1 year's level. They have crashed by around 6% from they were 1 year back. And then again, if we move back to Hang Seng index, then we can see that the Hang Seng index is also down by a huge 30% from last year's level. That means there is a possibility that the Indian stock market can correct further. Not only equity market, the cryptocurrency market is also down. As you can see that the Bitcoin has also fallen. For the Russia and Ukraine war crisis, the next big thing was the US Federal Reserve announced rate hike to control excess liquidity to combat global inflation. As we can see that inflation has also been increasing in India, as retail inflation has been hitting a 8-year high. And then as a result, our own central bank, they had to step in. So our own central bank, the RBI, they decided to also have a similar kind of repo rate hike just to control the hard hitting inflation. So this all has been factored in by the stock market. As a result, we can see that the International Monetary Fund, they have cut the India's GDP growth forecast for FY23 by 80 basis points, and this is all due to the global geopolitical scenario. And the FII, they are the smartest ones. They have factored this in for last 8 to 10 months back, and they have been selling all the Indian stocks and dumping all the global stocks since that time. The only saving grace is the DII in India, and of course we, the retail investors. We have been together somewhat been able to slow down the sell-off in our market. Keeping a long-term perspective will help you in this crashing market. Make smart decisions and mitigate any risks to your portfolio. You can do this only by choosing long-term value-based stocks. So see, if you are still not invested or under-invested, so this is the right time for you to invest your extra money. I repeat, if you only have extra money, then only pick your value picks and deploy the money for long term. So today it is time to say bye-bye. I will be keeping a track of the market and will be soon back with an interesting video. Keep tuned on, guys.